Whenever markets go on historic runs, there's always a question that we all ask together. Whether you're a trader or an investor, are we in a bubble? Today, we'll try to understand whether we are in one and, more importantly, what would happen next. But as we know, there's a new king in town, and $20 billion of options was traded last week, making Nvidia the stock to watch. Another one that we need to be watching is often considered the canary, and Apple over the last 24 hours held the base. But what happens if it breaks past this zone or this zone over the big economic news ahead of us? And more importantly, are there opportunities coming around the world? Well, oil certainly is strengthening, CTAs are starting to heat up, and this chart may hold the key. So join us today as we break down some of the most important charts around the world for stocks, commodities, and cryptos. This will be a good one. Well, welcome back everyone to one of the largest daily shows on the planet where we discuss markets around the world together. My name's Tom. We've been running this show for so many years, and if you love markets like we do, remember to subscribe. Just a quick reminder, over the last 24 hours, we put out our weekly newsletter. If you want to sign up for that, links in the description down below. Some amazing data that we share through those reports. Name, email address, it's that simple. Let's get started with short interest, because this is something we brought up a lot over the last kind of 5 months. And it's just made a switch, which I thought was noticeable. We posted this over on our X account, and you can see here that the SPY has gone from a bull 33%, bear 67% rating. Now you might say, Tom, that's still really bearish. That probably means markets are going up. But here's the catch. We've been over 70% now for almost 5 months. So basically the markets have been historically very, very overly shorted by CFDs, which tend to be retail trade bets and tend to be, of course, what we would call the wrong side a lot of the time. We've also seen gold and oil go down to bullish lows. Now, what this means is if you look at gold or oil, historically, gold sometimes sits around 80% bull bets from retail traders. Usually it is more bullish than bearish. It's at 61, and that might become quite important when we take a look at some things later on today's show. So what's clear is the S&P is starting to lose a little bit of its overall shorts from the CFD or retail side. But what is coming ahead of us? Well, we know core PCE price markets are going to be projecting a 0.1% move or less in terms of what's coming up. Now, it's very important that we continue to see the Fed's 2% target being reached. Anything worse, and the market's going to push yields up over the next couple of days, and obviously that could be the straw that breaks the camel's back. So it's very important that we still state at about 0.1% from the core PCE, and we'll talk about when that's coming out later on today's show. Something, though, you should be very aware of. Let's now get into further short action, but in this case, what it actually is a huge amount of options market trades towards the call side. Now, you'll notice here that over the last kind of weeks, we've seen single stocks absolutely activate. This is thanks to earnings season, but also thanks to Nvidia. And what this really shows you is things like Tesla and many other single stocks are starting to heat up, similar to what they were doing in 2021. Huge momentum-based moves caused by massive amounts of options in the market. Now, you might notice here that the call-put ratio for the index is quite high and elevated, and also that the aggregate across the board of everything is getting into those zones that we've seen in previous years, really the last 2 years, being a point where we might see selling in the markets. This chart probably demonstrates that a little bit better. You can see that back in previous times, we've often gone into net call volumes going quite high. We saw this about a week ago, and this point means that we need to be cautious. Single stocks, sectors usually become the best kind of investments and trades for now, and the indices become a point where you want to be very careful about what you're doing. And we've seen that over the last couple of weeks. Really, single stocks and sectors have been some of the better investments, and even opportunities that aren't even in the American market. We'll talk about those later as well, because there's some good stuff coming up for those and some great moves. Congrats if people have been in a few of those. So what about put-call ratio? We know that, of course, the amount of puts in the market is very low. It's really all call buying at this stage, and we've seen that go on for months and months and months now. Well, it turns out it just hit into this red line here, which can be synonymous with, again, peaking of markets. So let's now take a look at the markets around the world, and more importantly, let's have a look at the NASDAQ composite percentage change after a major technology release. Now, in this case, we have ChatGPT coming out in 2022, and arguably AOL and Netscape, if you remember what those are, I'm sure there's some viewers that don't know what those are, was a huge change, which was, of course, the beginning of the internet as we know it. Now, in this case, what happened was we led on to the dot-com boom. So I think this chart really shows you something that's quite interesting. Could we be going for further good times ahead? And of course, will there be big pullbacks inside of this overall rally? Well, the answer is quite simply, it looks like that might be how it is, because of course you can see here what happened when those big releases occurred back in the past. It also brings up the question of whether we're in a bubble, because of course when people mention you're in a bubble, usually markets will continue to go higher. It's when people say, oh, there's no bubble, there's no problem, don't worry, that you need to be concerned. Now, obviously that one news article said that we're not in a bubble yet, but I haven't seen a crescendo of bubble discussion yet. We'll go through that more because I think it'll become a big part of 2024 and 25 as we see markets most likely, based on the stats, end up causing new highs. So this is, of course, Wayne's study here, and what he's shown is that when we had that December, January, February bullish move, we tend to go into a bullish kind of movement for markets over the next year. In fact, we tend to go into crescendo movement, which goes very, very strong. 25-0 is the overall read. And that's not to say there weren't pullbacks. You can see here in pretty much all of the opportunities over those years, there were months that went negative. So that is probably still going to happen, but it was overall bullish. This is another read, which of course, January and February overall being a bullish period generally means that you're going into a 96% overall bull time. Now, again, the reads here are all good, except for 87, which had the flash crash. So if it wasn't for 87, you'd pretty much be looking at 100% read again for good times ahead in markets. So we brought up this chart. It hasn't happened yet, and we're at the back of February right now. Now, generally in presidential election years, we have a sitting president running, we tend to see sell-offs through the period of March. One thing's for sure is that the skew index got pretty wild the other day. And generally when the skew gets wild, we are ahead of the times. It's an early indicator. And that generally means that there is some kind of internal volatility that's about to come into the markets. I expect March to be volatile, whether there are only bears in the market or whether it's all bulls, we'll find out. But of course, there are some stats here to state that really the Russell and the NASDAQ would be the worst markets theoretically in March if we were to go into a sell. Now, why could a sell be coming? Well, of course, Nvidia is the linchpin of the markets right now, and arguably that Apple hold over the last 24 hours was a good sign so far for markets, because of course, if Apple loses 180, I think it's going to change a lot about the options report. Check out our weekly newsletter. As I mentioned in there, a huge turn point at 180. It is not just a put support, it's also a gamma change level. So what are we thinking here with Nvidia? Well, we've seen this happen a few times, multi-year highs, and obviously then a fall from grace that happens over the next 1 to 3 weeks. Now, that would be in the time slot that we kind of think about here from the March perspective, and it turns out it's happened 100% of the time. Now, you could say this time is different for sure. It certainly could be, but it's been a historic run for Nvidia, some great moves, and as we can see down here, on average, the stock will lose around 11% over that period. Are there any other signs? We've talked about CTAs before. We know that if CTAs start dumping positions, we need to be paying attention, as this has been a pretty good read of a turning point in markets. The good news and the bad news is that for the good news for the bulls is we have not seen the S&P 500 dump in any particular pattern just yet. But I guess the good news for the bears is we did see a bit of a pullback coming into the Nvidia earnings. So obviously there was a sell, which we also represented in our previous video, based on what the hedge fund managers were doing and some advisors were doing, which was clipping a bit before the Nvidia earnings and then going into actually Nvidia itself. So yes, we've seen a reduction. We'd like to see another reduction here with the CTA updates, which we'll have on this channel. So make sure to subscribe for that. And we will see whether we actually have that weakness. If we do, and price action comes with it, I think we know we're in for a proper correction. And what that means is actually more than just a 1% or 1.5% sell. So the other question of bubbles is, are we in a historically over-leveraged asset bubble time? According to Bank of America, the answer is quite simply no at this stage. But if we get into these territories, that's when you need to be concerned. And there are some absolute epic ones. 8.5 reading, 6.8 reading. You know, when you get into those types of bubble territories, you know things are about to get serious. We're not quite there yet with the 0.7. So let's now talk about one of the biggest stock markets in the world, and that's obviously China. And we've been pretty bullish here on the channel for good reason, I think, with thrusts and massive amounts of intervention and all sorts of things. The news will always give you everything's negative, everything's terrible. Don't get me wrong, it probably is. But you've got to remember those stocks were down huge amounts of percentages. In some cases, 90% of the stock was wiped off. Now, we know that we're in that Lunar New Year cycle, and we've been talking about this a little bit on the channel. And over the last 24 hours, we saw a lot of the tech stock indices jump up around 3%. We'll look at it on the charts later on, but it was a very nice move. And congratulations if people have been, doing risk management, but obviously adversely thinking about these types of other opportunities. It's not just Nvidia in the markets, guys, or Tesla or anything else. There are always tons of opportunities. On this channel, we talk about the idea of an abundance mindset, and that's because really of the chart like this, where we see a huge amount of opportunities, where tech obviously has been the best so far, but then we have some of the laggers, utilities and energy. Are they about to turn? Well, according to CTAs, it looks like they're starting to buy back into the energy trade. And you can see here a new higher high being formed by Brent and US oil CTAs over the last week. Now, that's interesting because, of course, we've been talking about this chart here, which is where we have a resistance that's been struggling a little bit. Well, it could be that oil's just about to start pumping again, and getting past 80 will be a big level. We'll look at that a little bit later on today's show. Here's an update on everything to do with options and all the expiration dates. I think it's pretty clear there are tons of calls sitting around 510 and 520. Obviously, if we do get through 510, which in this case would be 5100 on the SPX, then we're probably looking at further positive gamma squeezes to the next zone. And just remember, every 50 points in the market at this stage is very important. Now, what I noticed though is 507 is a big level here, which is basically 5070. Now, that could be where we're starting to see a switch from the positive to the negative side in stocks. Now, a little while ago, we were starting to move into negative, negative gamma being, a little bit lower. So it was more in the 480s. I think the first level here of concern is going to be 5070, which is a bit of a support zone, and then 495. So 4950 is now going to be a huge switch zone for the markets. And in terms of overall options and the way that they're structured, that could be a massive turning point from where the bulls start to lose control to the bears. It's also going to be around that daily 20 moving average, which we know is key. Another one we want to be watching is everything to do with financials. Often financials lead the kind of weakness in markets. At the moment, financials have been very strong, although we did see about 24 hours ago a monstrous trade here on a 3x fund for financials. It could be a take profit from this other big trade, or it could just be a sell that's starting to come through. But whatever it was a dark pool transaction and it was big. Over in the options world, it wasn't a huge day. 60% calls, 40% puts, again in that call ratio. Retail traders made up 31% of the overall single legs, which shows an increased bump. I think we were sitting about 29 and 28 a few weeks ago. So obviously retail traders are getting wild. And it's all in a couple of stocks. Of course, Palo Alto getting a huge bump thanks to Nancy Pelosi. Though I do want to mention here, I think a lot of people make a big deal about what Pelosi does. Obviously, the Nvidia is the one. But do remember, she did buy it before the earnings in a huge chunk, and then she bought extra on the dip. So she does sometimes not do so well, although her track history has been pretty good. There's a bump there, but that doesn't mean it's going to just continuously vertical shift. What might happen is it comes back down for a bit and then rises later. There's no doubt that it is a good quality stock, and losing 27% in one day was a massive move. Overall, you can see some big moves here. Pause the screen if you're interested. Let's get into the charts. So first up, this chart here. No changes yet, guys. If we do see this thing start to spike up, that's starting to show us that there's weakness in the markets. At this point, it's overall strength in the markets. In terms of what's going on with federal central bank liquidity and central banks around the world, they remain neutralized, so no real movements there. And when we talk about yields, then of course we need to be looking at the US 2-year yields, and we know that they're still sitting, waiting for that core PCE most likely to make a decision. A breach up in yields, not so good. A breach down, obviously probably positive for the markets, at least you would think so. Another thing is that oil is of course approaching these highs as well at the moment, approaching the resistance, all in anticipation of this big news data. When we go over to the bonds indicators across the world, you can see it's been a little bit of risk off, but nothing to note home about. Obviously, when we're sideways or up in terms of these bonds indicators, We don't really need to be super concerned about the markets. If this starts to make a new lower low, hey, if the markets are going up at that point, I know what I'd be doing, and it certainly wouldn't be being short-term bullish on the markets. Bonds matter. At this point, though, they're not freaking out. Home builders also not freaking out. You can see a historic run here on home builders, and we've talked a lot about this. Obviously, it just continuously makes higher highs and higher lows. There was a little hiccup back here in 2024, went sideways for a while, but it obviously made its decision to go bullish, and the markets have since followed in that direction. Euro, US dollar, and dollar index in general. Now, this is an interesting one. We saw the DXY actually breach lower underneath the 20 moving average, signifying that we might be in for weakness in the dollar and strength in the euro. It's probably what you would call a scale portion. So what that means is that it's an early signal. It's obviously not through these lows yet to make all highs on the euro to make you feel really excited. But I could see a case where some people are starting to get bearish US dollars and bullish euros. Now, regardless of what you think about on the macros versus world kind of thing, that's at least what the price action is saying. But it's only the beginning. You really need to see a series of lower lows and lower highs coming through the dollar index. And obviously at this stage, it's testing that 20 moving average. I expect bigger moves to occur after the core PCE. And obviously at that point, I think we'll go into a momentum trade, which direction it'll be. US oil, pretty strong here, guys. Make a move to 78.50. Obviously, it got back up to that alert at 78.86. And I do think oil is starting to look really nice in terms of holding its own. We talked about this being an absolute critical level for oil. A break of the 80 zone should expose 82.50 to 84.50 relatively quickly. And I think a lot of this is all prepping ahead of the core PCE. But I wanted to mention here USO versus the SPY. Now, this is a long, short kind or a ratio style of trade. And what you'll notice here, and let's see if anyone in the comments section knows what that pattern looks like. I'm not even going to say it. I want to see if you guys know. It does look kind of familiar, yeah? So let's see if anyone can guess that one. I will say that from my perspective, that's the type of pattern that you usually see as a base formation. And obviously a breach of the 0.15 could be quite nice. Let's see if any of you eagle eyes spot it. And if you do, we'll post you in the next video. Overall, in gold, we do have that overall bullish tinge to it. Of course, we have here a bit of a switch to potentially the upside. And although we've come back down to the most traded zone, this is where I'd like to see buyers recommit towards gold. So if they're going to do it, a 2034 move should be on the cards. If that does happen, I think that will take out that wick, take out the shorters that are here right now, and then we probably move towards that 2055 level. Again, I wouldn't be surprised if it's just sitting ahead of the core PCE news. Tesla, bit disappointing really here. Rallied above 200, which I totally expected based on the last close. Nice close. I would have thought, though, that we would hold above that $200 strike. Now, if we did, it was a very bullish sign. Obviously, $200 plus switches everything, starts to get those calls working on Tesla and starts to get you thinking about 210, 220 or even better. So yeah, a bit disappointing to come back under 200. If you look at the price action, it was kind of just like the same movement, just kind of sold, and then found a rally. We're sitting on this little green line here right now, which is really where you've got bull support. So I'd like to see Tesla open up strong and trade relatively well over the next 24 hours. You don't want it to go above 200 and go red, above 200 go red multiple times. That is not a good sign. So it needs to go above 200 and actually hold it. Nvidia, we've talked about the weakness here. We obviously talked about that little bit of a joke with the cocoa prices. I think it's pretty funny that Nvidia is following cocoa price. But since reporting that we think there's weakness here in Nvidia, over the last couple of sessions, we've seen a material kind of little bit of selling. Do remember, a lot of people forget that even if you were buying calls, because I've seen this comment quite a lot last week and you were doing it before the earnings, because the earnings had so much options volatility built into it, by the time the markets actually were opening up, your options were actually getting crushed. So what was ended up happening is you weren't as profitable as you thought you would be, maybe only barely profitable due to the IV crush across the board. Well, as it turns out, as we know, that after this Nvidia earnings, we saw $20 billion of overall options activity. It was like 7 times larger than anything else. And what that led into is now we're starting to question whether Nvidia is going to go a little bit down here. Obviously, the data stats say yes. The overall technical analysis is nothing really. It's just holding its own zone. So it is a prediction. It is not necessarily a patience reaction in that case. SMCI continued on its downward trajectory since we talked about it. The bounce, very good. The sell-off, very good so far. Obviously, a lot of the things that we expected, and we've been talking about it over on our X account and on this channel. Let's talk about the canaries. So this wasn't a bad trade for the bulls over the last 24 hours, and I actually scrolled into it in small time frames such as the 10-minute. If you were able to get onto this around the 180, you can see here it pressured that 180 and instantly bull hammered straight back against that, showing that there was a buyer right on this level. Now, this is a huge zone. Again, in our weekly newsletter report, we talked about how this was a high volume area. Now, if this zone had been broken below, it could have been and still will be a very, very, very big level for volatility, for momentum, and we would expect Apple to possibly even sell quite heavily into 175, certainly that being a real possibility, but 170 even being the next zone. So high volume area, we saw a bounce, we bounced above the 182 zone, and now if it pulls back into that 180, 150, you'd have to think that there's going to be possibly a buyer here on the day trades. So I do think that the day traders at the moment have got control of this stock. Of course, we're not through the 184 and the downward trend line just yet, but that's a good hold for Apple for now. Still making a series of lower highs and lower lows on the higher time frames, so it's still negative there. But day traders, not bad. 180 key level, obviously we spoke about it. Pan W, yeah, this one here, the Pelosi stock. She bought some somewhere, what date was it? I think she bought it on the 12th, it was disclosed. So she bought it here really high, and then she bought some more on the 21st. So she got the highest point and the nice dip. Overall, it sent the stock up, but to me, it hit that 20 moving average on the daily. Around that 325, 330, I think was a good kind of like ramp. It's still holding its overall lows. So as long as it's holding its kind of higher low period, it's still bullish for now in terms of the rally. But I wouldn't get too excited about this. I could see it kind of doing this and then moving up maybe later on. So yeah, don't think it's necessarily fully momentum based. Everyone's aware of this Pelosi trade. Everyone tracks it nowadays. And the reality is she bought some here and she bought some here. So it was good to get that rally through. Everyone got hyperactive, but you can see someone did take some profit. Now let's talk about something that I think has been kind of unique to us as a community, and that's been talking about one of the worst markets in the world, and obviously a lot of people have disliked it, but that's been the Hang Seng. But in particular, of course, things like the CQQQ and the overall tech stocks in China. Now, they haven't really had any good pricing in them for quite some time. A pretty nice move over the last 24 hours, and certainly the dip has been purchased so far. Now, of course, there could be more to come just because we're seeing so much intervention. Now, that intervention doesn't mean good things are behind it, so it's going to most likely be short-lived, couple of months, something like that. But at the moment, the kind of movement here has been on the bullish side for Chinese stocks, and the momentum continues to carry on with the breakouts. Hang Seng, obviously, we wanted to break some of the key levels we've spoken about in the previous videos, but that'll be one we're watching. What about the US markets though? US 2K did okay, came back up to this 2061 level, still stuck within the channel range, still obviously overall you'd be net bullish, but I don't know if we've got a huge read on this. I've been looking for it to hit that 2090, 2100 for a while, but that zone remains a very big tipping point for markets. If it goes above here, I think it's going to be a great time for Russell stocks though. And we did put in our Monday session, we talked about all those 2021 stocks, a lot of those heating up big time over the last couple of sessions. You know, one of the ones that I can note was we spoke about Lemonade, which was a stock I really hadn't seen in a long time. And we talked about that literally on the open here. Really nice trade. I mean, obviously an incredibly good base. You may have got lucky. I don't know. I guess earnings is out of the way here. So incredible returns, but this was like a plus 20% in, or maybe even more in just a few days. So what these are is they're risky trades. They're obviously trades, you know, really melted in from 2021 when things were wild. But do remember, we're not in a market like this where stocks that make no money went ballistic. We are in a market though where stocks that made no money are still in basis. So yeah, Lemonade obviously rallying heavy here. And yeah, it looks pretty sweet, but it is what it is. It's probably gone now. Let's move over to the NASDAQ. Couple of days of weakness, then a little bit of strength. Nothing to note here on the NASDAQ, I think. 18,000 remains kind of like where you can see sellers trying to sell it down, which is right here. It could be that it's in accumulation at this point. It could be this is the sell wall. I don't really know because it's not really something that interests me from much of a trade. But overall, we did get a little bit of a low followed by a huge wick. So if we take the 18K level, you're probably looking at a new high here for the NASDAQ. So something to watch, the 18K level, I think all important. Along with this low down here, a closure underneath that, obviously significant, especially since we saw that spiking wick. When we move over to the S&P 500, could it be that it's setting up for some type of gap down? Obviously, core PCE is coming. If it does gap down, I think all of you would be familiar with what we call an island reversal. By itself, it's not very strong, but with some of the other indicators that we've got going on right now, the calls, all of that type of stuff, it may be a catalyst. Risk management is always key, March obviously being the key point. Until we're below the daily 20 moving average though, which we know has been bouncing this market the whole time, we're still in an upward trend and that's just the way it goes. US 500, you can see the upward trend. You can see the overall consolidation. Still a series of higher highs and higher lows. And really the only two signs that were weakness and during this whole run was the lower high here followed by this split point and that over there. There's nothing else that's been weak about this market in the overall price action run. So it remains still bullish unless we get some of those other signs. Bitcoin, bit of a surprise, 57K, obviously a huge rally through this level and it's getting all sorts of positive, press on it. I still kind of favor Ethereum here. We spoke about it the other day. I think 3,500 could be on the cards as we saw ETH versus BTC start to improve. Bitcoin, of course, usually leads. Ethereum usually comes second and then weird alts come third and then even weirder alts come fourth. Generally, you don't get to weirder alts until you're in a more matured market, which tends to happen a little bit after the halving cycle, which obviously is coming up. This is like no other halving cycle, though, at this point. The Bitcoin move, the Ethereum move, like anything in this market, stronger than they've ever been before ahead of such events. Speaking of events, we do still have some big news this week, guys, with obviously core PCE price index coming out. And we know that what goes on here is going to be very, very important. So core PCE, something the Fed does look at. Obviously, we've also got here ISM manufacturing PMI and revised UOM consumer sentiment. So Thursday at 8:30 a.m., I would probably expect in New York time, that is, some kind of volatility come through markets and we'll see what ends up going on. So be watching that event. We know it's going to move markets around the world. And just a reminder as well, if you want to get on our free weekly newsletter list to get more information about markets completely free, links in the description down below, name, email address, it's that simple. Bye for now, guys. See you in the next one.